Hello guys, welcome back again to my YouTube channel. So in today's video, mainly I'll be giving you guys my secret strategy that actually made me a profitable trader. So I'll be giving you the things I look out for before when I open the charts, okay? I'll be giving you the things I actually look out for. And then two, I'll be giving you the criterions for you to actually be using to take a trade, and then three, the confirmations. All right, and that's all for this particular strategy which I'll be giving to you guys today. All right, this is my secret strategy and only my students that I actually give the strategy to. All right, so first and foremost, we are going to be considering the market condition. First, you have to determine if the market is ranging, if the market is trending. All right, so those are the two market conditions which my strategy, this particular strategy which I'll be giving to you guys, actually works on. All right, so we don't participate in the choppy market. All right, so now let's go ahead and try to look at number one, the trending market. Okay, so now let's say the market is trending to the upside, and then we have highs, and then we have lows, we have highs, and then we have lows, and we have highs, we have lows, we have highs, we have lows. All right, in this particular manner or in this particular pattern, this is what an uptrending market. That means the market is what pushing to the upside. All right, the market is actually trending to the upside, and then therefore you can actually see what your highs. We have a high here, we have this high, we have this low, we have another high, we have another low, this low leading to creating a new high, creating a new low, creating a new high, creating a new low. So this is what an uptrending market. So for an uptrending market, what you're going to be looking for is what? Buying opportunities. Okay, so you don't chase the impulse. Let me go ahead and delete this. Let me just go ahead and delete the whole of this. Okay, all right, let me just delete this. All right, so when the market is actually making this impulsive move, you don't chase it. All right, so you have to wait for it to make a corrective move, and then at this point, this is where you should be looking for opportunities to go long. Okay, this is where you should be looking for opportunities to go long. Sometimes you can use other blocks. Okay, you can use other blocks. All right, and then take your buys from there and expect the move to the upside. All right, that's number one entry pattern. You can use other blocks. You understand? The market comes back to its a supply zone, a demand zone, sorry, then you expect the market to push back to the upside. That's the number one entry for a trending market. So the second type of entry is you have a break, you have the market pushing to the upside, okay, and then you have a breakout, and then you have a retest. So in this particular case, what are you going to be doing? You're going to be looking for opportunities to buy at this retest. Okay, you're going to be looking for opportunities to buy at this area of retest, because this is your area of interest. And then if you pick your Fibonacci tool from the swing low to the swing high, most often times you find out that the market comes back to retest the 50 Fibonacci level, and sometimes the 60 Fibonacci level. Those are the key reliable areas where you be waiting for the market to actually retrace back to before you take your buys. All right, this is for an uptrending market. This is how to actually look for buy entries for an uptrending market. So in either way, you can actually when you wait for the market to come back to these key levels of the fib. So what I actually do is I look for candlestick patterns. All right, so I look for candlestick patterns that actually support that this market is actually going to keep pushing to the upside. So in this particular case, when the market comes to the 50 fib, I don't just buy at that area. I wait for the market to actually react to that area. Then when it reacts, that's the time which what I go in to the market. Okay, that's the time which I go into the market to take my buys. So if it doesn't react at the 50 level, surely it will react at the 60 level. 61.8 level. If it doesn't react, it certainly is going to react at the 71.8 level. So there's no point to actually rush the market. There's no point to actually make assumptions on things you have not actually gotten confirmation yet. So I hope you guys are following. So the next one now we are going to be looking at is we are going to be looking at what a downtrending market. All right. So now we are going to be looking for a downtrending market. The characteristics of a downtrending market is what? A low, a high, a lower low, a lower high. Sorry guys, just pardon me. Let me just go ahead and delete this, okay? So the characteristics of a downtrending market are a low, a lower high, lower low, lower high, lower low, lower high, lower low, lower high, just like that in this particular pattern. Okay, in this particular pattern. So now you have low, your low, you have your lower low. All right, this is what a downtrending market. It might not actually be perfect, okay, but I'm trying to drive home a message. My point here is not to gain perfection, but to make sure you guys actually understand what I'm teaching you guys. So now, this is a typical example of a downtrending market. You have what? You have your, you have low, you have a lower high, a low, a lower high, low, lower high, low, lower high. So with every low creating, you're expecting the market to retrace back to a certain key level and then keep pushing to the downside. It retraces, you're expecting the market to keep pushing to the downside. So now for a downtrending market, how do you look for selling opportunities? So now we're just going to go ahead and delete the whole of these stuffs which we have on our charts. Okay, so let's go ahead and just delete the whole of these things which we have on the charts. So right now you have what? Let's say you have an impulse, like you have an impulsive move to the downside. Okay, and then you have a corrective move, and then you have a breakout. All right, you have a breakout. You have this breakout. So now there are two ways which you can actually do this. All right. So first, you pick your fib from the swing high, to the swing low. Okay. So now you have your 50 Fibonacci level. All right. So this is for the price action traders. So you have your 50 Fibonacci level. So you wait for the market to come back to the 50 area. If it reacts, fine. You look forward for selling continuation to the downside. If it doesn't react, then you look for it to go to the 60 Fib, 61.8 key level, and then you're expecting it to react, and then you look for entries to the downside. And then if it doesn't, certainly the 61.8 level. All right, if it doesn't react, the 61.8 and the 78 level will certainly do the job of delivering price. Okay, the other one is mainly the smart money approach. So how does that actually work? All right, for the smart money approach, you have the market pushing to the downside. You have a corrective move. You have a corrective move. You have this. Okay, so now what happens is you wait for the market to return back to the area of supply. Okay, supply. Because why is that an area of supply? Okay, I'm coming, please, guys. Just give me a sec. Why is that an area of supply? Supply zone, yeah. So now why is this an area of supply? Because this is the area that led the market to taking out the breaking this structure. Okay, that led to the break of market structure, right? The break of market structure. So now you wait for the market to return back to that area. you wait for the market to return back to that area, and then you wait for it to react, then you take your sales. You wait for it to react at that level. You wait for it to react at that level, then you take your sales to the downside. You take your sales to the downside, and then your stop loss just slightly above that area. So that's that. So now we are going to be looking at what the ranging market. We're just going to be looking at this last example for the ranging market. How do you approach the ranging market with my strategy? So now let's say the market is trading between the resistance level and the support level. So now what are you going to be doing, guys? Demand zone, yeah. So now between the demand zone and the supply zone, which is mainly same thing as the support and resistance level. So now when the market actually comes to the support level or the demand zone, what you're going to be looking for is potential buying opportunities back to the supply zone, and then so on and so forth. Okay, so on and so forth. So but now, guys, there is something I just actually want to explain to you within this particular setting of the ranging market. All right, so now let's say the market comes down to this area. Okay, now what you want is you want the market to actually do something like this. Okay, so majority of the time it will give you this. All right, you wait for a change of structure on the smaller time frame. Usually you can get that from the 15 minutes time frame, the 30 minutes time frame, if you're dealing with the hourly chart, the 4 hours chart. So now you wait for this kind of structure, all right, at the support level, and then your stop loss just slightly below, and then you target the supply zone. The other way which I would do it is looking for powerful candlestick patterns. All right, looking for powerful candlestick patterns at let me just delete this. The other way which I will approach this market is looking for powerful candlestick patterns within our demand zone, and then those powerful candlesticks will give you confirmation to buy this market all the way back up. So now, without wasting much of your time, guys, let's get straight up to the chart. All right, let's get straight up to the chart. Okay, so now looking at gold, now we are, for a while, it's been trading between support and the resistance. Here we highlight this area to be our demand, our supply zone. All right, supply zone. We highlight that area to be our supply zone. All right, we highlight that area to be our supply zone, and then we highlight below here. We highlight below here to be our demand zone. Okay, so now between the high and the low, what are you looking for, guys? You're going to be looking for at this area, at the demand zone, you're looking for buying opportunities. At the supply zone, you're looking for selling opportunities. Okay, guys, so whenever the market comes to this area, you're looking for sell opportunities. All right, so I advise you guys not to be to approach this thing with an impulse, like with an impulse, like it comes to the supply zone, you sell immediately. No, there is some trick around it. Okay, there's some trick which I myself used around it. So if you decide to sell it at this area, guys, if you decide to sell it at that area, majority of the time you'll find your stop loss getting getting triggered, and then the market will decide to come down. Okay, because you don't know the exact area where the market is, the exact level where the market is going to reverse from. So what you do is you wait for the market to react, and then you sell. Okay, you wait for the market to react, then you sell. So let me just show you guys a little example here. All right, so you don't necessarily have to catch the market at this area. You don't necessarily have to catch the market at that area. You don't necessarily have to do that. So this is a trade which I took. So this is a trade which I took. Like for instance, you have this, you have this, you have this, and then this. So now this is a trade which I took, guys. That's a trade which I took. Like I'm just gonna show you guys now. Like that's a structure. That's the structure of the market. Like that's a structure. So this let me just make it clean a bit. Let me just make it clean a bit. All right. So now you're looking at this. So now you're looking at this, guys. All right. So you see, so when it retested, you're looking for selling opportunities. So now, guys, let me just go to the chart now and show you this particular example. Okay, let me show you guys this particular example. So in this particular case, we have a low being created, a low, we have a high, a low, we have a high, we have a low, we have a high. So now this particular area coincides with what our example. Okay, it coincides with what our example, which I've been explaining to you guys. All right, it coincides with it typically well, and I'm going to be showing you a trade which I actually took with this the moment I'm done with this. Okay, so now you see guys, you see this area. The moment it broke out and then came for a test, it did not actually react. It did not actually react like below here. It came a little bit higher, okay, but it did not take out those highs. So then I sold. I remember selling this, and then my take profit was somewhere here because of the way this area was. Yeah, somewhere there, because of the way that area was. And then my stop loss was just slightly above that area, and that was what a 1:4 risk to reward, and that's 100 pips, 110 pips. Yeah, that was 110 pips. Very clean 110 pips. And then for other confirmation reasons, you see, from this area, for other confirmation reasons from this area, which, sorry guys, I just wonder what's going on. Okay, for other confirmation reason from this area, which actually gave us that retest, you see guys, that it came towards the 71.8 FIP bonus C2, 71.8, because this was a high, this was a low, that area. So you see, it reacted at the 71.8. So that was more confluence for me. All right, that was more confluence for me. All right, so now we are going to be looking at another one again. So right now we are looking at this. It's at what, the supply, at the demand zone. Okay, at the demand zone. So for the demand zone, you're going to be looking for what? For buying opportunities. All right, and now for this particular area, we have what? If you're a smart trader, this is a double bottom. Okay, this is a double bottom, and then boom, to the upside. Okay, that's a double bottom, and then a W pattern, and from there you can actually take your buys. Now let's go to the 15 minutes. Okay, let's just go to the 15 minutes. Let me show you guys some wonderful stuff, guys. Let's go to the 15 minutes. So you are actually seeing the double bottom. You can, based on that now, you can actually still trade this. Okay, so this is the first leg of it. This is the first leg. Okay, on seeing the second leg not breaking, the market is not actually breaking. The market is not actually breaking below this area. Okay, the market is not actually breaking below that area. You can actually take your buys. Okay, the other thing you can actually look for at the key levels is what chart patterns. You can look for double M patterns. You can look for W patterns on at the demand zone, and then the M pattern at the what supply zone. So from here you might have smashed your take profit, guys. So the other way around here is now looking at this area. You have that double bottom, okay, and now the market decided to trade above this area. So now what you do is what you take your buys from here, and then you target that area, and then the stop loss just slightly below. And then this is, you see, that's wonderful. So now this candlestick which you're looking at here is a very powerful candlestick. See it. That candlestick is a very powerful candlestick. You would have just taken your buys and your stop loss just slightly below that area. So for safety purposes, you can keep your stop loss just here, about 30 pips, and then you're making about 140 pips. So this thing I'm teaching to you guys actually works very well. It works very, very well, guys. It works very well. So now we are done with the ranging market. Now let's look at some example of what trend. Let's look at some example of trend. Now let's use the GBP USD. All right, let's go to the GBP USD. At this point in time, we have to go to the 4 hours time frame, guys. All right, this is a pound dollar. What we have to do is we have to start viewing the market from the higher time frame perspective. Okay, the charts are actually loading. All right, so now what you guys can actually see, this is what a trending market, and the market is actually trending to the upside. But for now, let's look at this thing. Okay, let's look at this thing. All right, and I'm going to depict the whole thing, which I actually taught you guys here on this particular chart. Okay, so now we are looking at this. All right, where an uptrending market is a market where market creates highs and lows, high highs and high lows. All right, and the downtrending market is a market where the market creates lower lows and lower highs. All right, so now we are just going to go ahead and highlight those points. Okay, so now we have, let's forget about this area, like let's forget about the whole of this side here, and let's just forget about those, just forget about that. Okay, and now looking at this, we can actually see a high here, a low. You can see that high, you can see that low. All right, and it kept on going in that series, guys. It kept on going in that series of highs. You have that high, you have the low, you have that, you have this, and then finally it stopped. The trend actually changes. So now let's look at some examples and looking at it from the higher time frame perspective. Okay, so now a high is created. Okay, and this high took out this all these other highs here. All right, so a new high is being created. So now what you wait for is a retest. Okay, like I said, the retest can happen. Sometimes you might anticipate it to react at this particular key level, but you don't do what you don't need to make assumptions, because assumptions will make you enter trades that you're not supposed to enter. So at this point in time, you wait for the market to actually react, and you wait for momentum. Okay, so now looking at these candles here, these candles lack momentum. Okay, those candles lack momentum. So I won't advise anyone to actually take those kind of trades. So now from the swing low to the swing high, so now you can actually see that this market actually made about a 61.8 fib retracement, and now this is our demand zone. This is our demand zone. So, and the market made our 61.8 fib retracement, and now you have this powerful candlestick pattern, which actually confirm your trading entry. And there you can just take your entry, your stop loss just slightly below, and then you target the highs. So you see, you're making about 1:4 risk to reward, guys. You're making about 1:4 risk to reward on a particular single trade. So now let's look at other examples. Let's look at other examples for a downtrending structure. Okay, and mind you, the trend of this market has actually changed temporarily. All right, because the trend line has actually broken. Okay, this trend line has actually broken. That means the trend of the market has actually changed. Okay, so the trend line has actually the trend has changed because the trend line, the market is no longer trading inside of this trend line. So now what we have here is we have a low, we have, let's analyze it, let's read together. We have a low, a higher low, lower low, so like that. So we have this kept on going in that series, guys. Boom. So this is what a trending market. So what is your take on this? What are you looking for? You're looking for selling opportunities, and then you don't chase the impulse. You want to enter at what they retest. So right now, let's just go ahead and delete the stuffs which we have highlighted. Okay, let's just go ahead and delete what we have highlighted. All right, so now we have our retest here. That's our area of interest. Okay, so because we have this low, it came back to that area. That's where we have a reaction, and then since we have a reaction there, and you are seeing this powerful candlesticks, this powerful candlestick pattern, which indicates strong momentum for sell, then you can just take your sells, then just target the low, and your stop loss just slightly above, and then you see yourself smashing the TP. Okay, smashing the TP. So I would have loved to go down to the smaller time frame, but for the sake of time, okay, we won't be able to do that. We won't be able to do that, guys. For the sake of time, we won't be able to do that. Okay, guys. So, but you see, you could have just sold. Target these lows here, and then your stop loss slightly above, but your TP1 should just be slightly below here, and then you break even, and then the remaining trade play out. Okay, and you see that you smashed your TP. So now and again, the trend of this market has actually changed. All right, the trend of this market has actually changed. Why has the trend changed? Because we are no longer trading below this trend line. Okay, we are no longer trading below this trend line, and secondly, because the last higher low has actually been taken out, and then we have a new high, and then we have a new low, we have a new high, we have a new low. So in fact, from this point in time, after the break of this area, which is the break of market structure or the change of character, all right, which is the change of character. So guys, whatever smart money says is the same thing as price action. You just have to learn to understand and adapt. Pick what you can play around with. You understand? Pick what you can understand and play around with. It's still one and the same thing. So you have a break of market structure. You have the market return back to your demand zone. All right. And then from here, you go to your smaller time frame. You look forward for entries to smash your TPs to the upside. You look for entries, and then you see you're smashing your TP because the market actually returned back to the demand zone. So now, even if you pick your fee from here to here, you see that the market actually came back to the 61.8 Fibonacci to retracement. So that's that, guys. That's that. There's a lot more I'm going to be teaching you guys, but I can't exhaust it all in this particular video. And I hope you guys got a good content from this. And please endeavor to hit the like button, subscribe to this YouTube channel so that I get to produce more and more wonderful content like this. So I'll be seeing you guys in my next video, guys. I hope you guys anticipate that. Please endeavor to share my link to as many people as possible, guys. See you guys in the next video.